Hey, this is Abhiram and welcome back to my channel. This is the second video in our India GST approach series of videos. And in the previous video, we saw what is GST. We understood what are the different types of GST like the IGST, state GST, central GST. And there are also other types of GST. For example, there can be an RCM, which is reverse charge mechanism, etc. And from an SAP point of view, we understood what is a tax calculation procedure and the difference between a condition-based procedure and a rule-based procedure. We also saw the tax INN procedure that SAP had provided for India GST, and we also saw the tax condition types like JOIG, SG, CG, UG for output GST and JIIG, SG, CG, and UG for input GST. There are also other condition types as we discussed for RCMs, for non-deductible taxes, for deductible taxes, etc. We also saw what is an access sequence and how the access sequence will help to determine the condition required for a particular condition in taxation. And we also saw the FV11 and the VK11 tax condition record maintenance, which is used for deducting the tax rates at the time of a transaction posting. During any particular transaction, like be it a purchase cycle or be it a sales cycle, GST is calculated at the time of posting the invoice. For example, if there is a P2P cycle, then it's at the time of Myro the GST is actually calculated. And in the O2C cycle, it is at the time of billing document the actual GST is calculated. Although the condition records are picked up in the calculation procedure or the pricing procedure right at the time of purchase order or the sales order, it is at the time of invoice the actual GST calculation happens. So if it is an FI only transaction, for example, if it is posted via FB60 or if it is posted via FB70, then it is posted directly during this transaction saving itself. So here you can see this is the screen of FB60. If you see this one, this is customized for the India specific layout. The company code, whatever we have chosen is an Indian company code. So based on the company code, if it is the country is India for this company code, then the additional fields are populated upon implementation of certain GST notes. You can see the business place, the section code, and also the GST partner. And here you can also see one more important field, which is the HSN and SAC. So if you remember in the previous video, we saw that the determination of the tax rate usually happens on three important parameters. One is the sending region or the state, the other one is the recipient region or the state, and the third one is the type of article or the type of product that is being transacted between these two states. So the type of product or the service is determined based on this HSN or the SAC code, which is also called as a control code. So how is the sending location and the recipient location determined, and what is the use of GST partner is what we are trying to understand now. So vendor is an object that is determining the sending location. So for example, if you're having a vendor here, then in the vendor master data or the business partner master data, under the address details we are giving the state code. So based on that state code, the GST condition records are picking up what is the sending location, and to determine what is the recipient location, we are having the business place. So the concept of business place, which is used in India GST, is to determine the region or the location in which the transaction is actually happening. Because we cannot enter what is the region into which the transaction is happening, that means the recipient location manually in this transaction, we are entering the business place. So the business place is in turn mapped to a particular region. In order to configure the business place, we need to go to SPRO. Under financial accounting, if you go to the financial accounting global settings, under tax on sales and purchases basic settings, we have an India specific node, and in this there is a goods and service taxes or the GST node, and here we can maintain the business place under general settings, define business place for GST India. So this entire India node is very much specific to S4 HANA. Even though after implementation of the GST nodes in the ECC system, these nodes were not available. But of course, each and every transaction or each and every node mentioned here can be, but of course, each and every transaction has a separate T code which can be accessed directly in ECC system. In S4 HANA, all these have been consolidated in SPRO also. So if we go to define business places are defined at a company code level. So we need to enter what is the India company code, and under that we can define what is the business place. The recommended approach of having a business place ID is to be in line with your state code. For example, if your state code is 01, then the recommended business place ID is to be 0001, so that the moment I see this ID as 0001, I can understand that this belongs to the state code 01. So business place is not just something that is So business place is not just something that will determine a state code, but it is also something that will determine or define the legal entity in that particular region. For example, if the business is operating in the state Jammu and Kashmir, then we are going to define a business place as 0001, and we are going to mention the company name in this particular business place, and here we are going to mention the tax number 3, which is nothing but the GSTIN registration number that is provided by the India government for that legal entity for this particular state. So after entering these details, we will enter what is the country and the region and the address. So after entering these details, we are going to enter the country and the region, and here we are going to define the other address details also, and based on the region code that is entered here, the state code will be determined for this business place. So based on this mapping of the business place with the region or the state code, whatever the transaction that we saw in FB60, the business place will help us to determine the recipient region code. So this is how the sending location and the recipient location are determined in the transaction code FB70. So another important parameter for determination is the HSN code. As this is a manually entered transaction, the HSN code is also entered manually, and based on these three combinations, the tax rate will be determined. Now, the one more important field is the GST partner. GST partner will determine the actual legal entity that is participating in the GST law for that particular vendor. For example, you might post a transaction onto a particular vendor, but that particular vendor might not actually be a legal entity registered under the India GST law. So there can be another business partner which is actually registered under the GST law, which is used for posting the input tax. So in that case, we will map the vendor with this particular GST partner. So ideally, the moment you enter a vendor master data here, the GST partner is automatically determined the same as the vendor what you enter. But if at all it is different, then you have an option to change this GST partner manually, so that the region of the business partner entered in this GST partner field is used to determine the GST tax rates based on the condition records. So this is how there are additional fields with respect to India company codes which are used for calculating the GST. So the same way if you go to FB70 also, it works in a very similar fashion. The only difference here is that the sending location is determined based on the business place, because business place is always of our own legal entity or of our own company code from which we are doing these transactions. So the recipient location is determined by the master data from the customer business partner, and HSN code is again entered manually. Now we enter one tax rate. So for example, we are entering some output tax code which will enter it as O1. And now for this O1, we are going to define what are the different tax rates based on the combination of the sending region code, recipient region code, and the HSN. That, as we saw earlier, we are going to enter in the transaction codes FV13 or FV11. Now this is about the manual transactions. If we go to the transactions of integrated postings, like if you go to the P2P cycle, we are going to Myro. So in Myro, how the region is determined and how the HSN code is determined is a bit different compared to how it is determined in the FB60 or FB70. So in this cases, the regions are determined one thing based on the vendor. Obviously, when there is a vendor, from the vendor master data, the address details, the sending region code or the state code is determined. Now coming to the recipient region code, we need not enter the business place manually here. If we are trying to post a vendor invoice, in the purchase order, we will determine what is the plant into which the goods are supposed to be received. So we are having the plant here. So this plant is in turn assigned to the business place, and based on this mapping of plant to the business place, the recipient region code is determined. So to see where we are going to map the business place with the plant, that is done in the same node here. So this is where we saw defining of business places, and here we have assigning of business places to plants for GST India. So if you go here, for each and every plant that is determined, we are going to map that particular business place for that particular company code. So based on this mapping, for example, if the plant is chosen as F8 sorry 5825, then the business place is taken as 5825 and the region that is assigned to this business place is used as the recipient location. So this is how the regions are determined if it is a purchasing cycle. Now the article code or the HSN code is determined based on the material that is being used. So if we go to the material master data is having the HSN code assigned. So that can also be seen in the table level. So we can go to the table Mara, and here we have the technical field name for HSN code is STE. In the material master data, the HSN code can be entered under the section of international trade import, and here you can see the control code. So this control code will define the HSN code. So based on the material that is used in the purchase order, the control code is also determined from the material, and based on this combination of the regions and the control code and any other parameters if at all mentioned in the access sequence, the condition record will be picked up. So this is how it is determined on the purchase cycle. Now if we go to the same way, if we go to the sales side, then under the transaction VA01, when we are defining what is the sales order, in the sales order also we will define the customer as well as the sending plant. So based on the customer business partner address data, the recipient state code is determined, and based on the plant for which the order is created, based on its mapping to the business place and the state code, the sending location is also determined, and the HSN code is determined from the material master data as we saw earlier. So this is how the determination of different parameters which are used to calculate the tax rates based on the condition records are derived in SAP. Now that we understood the basic configuration and we also saw how the different parameters are fetched in a particular transaction to derive the tax rate, after the tax rate is derived, we need to understand how these postings are happening in the FI module. So obviously, when there are different types of taxes, we also want to maintain different GL accounts for each type of tax. So input GST will have a different GL account and output GST will also have a different GL account. Similarly, you will have a different GL account for CGST, SGST, IGST and UGST, be it input and output. Now, in addition to that, SAP also recommends us to use a different GL account for each and every business place, so that we will have a benefit of taking reports individually for each and every region specific GST transactions. So at the time of submission of the GST returns to the government, it will be easier for us to derive what is the input tax register and the sales tax register at a business place level. So for this one, we need to create different GL accounts for each and every state or the business place and each and every tax combination, and we need to assign these GL accounts to the business place for those transactions. So that can be done in this same node. Here we're having an option of define and assign GL accounts. If you click this, we have charts of account and the transaction. So under every charts of account, we need to assign these GL accounts to something called as a transaction. So what is this transaction? Transaction is nothing but this will derive what type of a tax it is, and this transaction is in turn mapped to the tax condition type in the tax calculation procedure. For example, if we go to SPRO and if we once again visit the tax calculation procedure under financial accounting global settings, and if we go to the calculation procedure, so here we're having tax INN, and if you see here we are assigning something called as account keys. And also if we go to the pricing procedures, then here also we are going to assign something called as an account key. So based on this account keys that are entered, we are going to define the transaction. So account key is nothing but the transaction. For example, if we are having a transaction as IGST, then it is for output tax, then the transaction defined by SAP standard is JOI. So here we are going to enter a particular charts of account. So let me choose one charts of account. And here for this combination of a business place, we are going to enter the debit and the credit GL accounts. And here, if you want, you can also define a different sets of GL accounts for a different tax code. So this is how the GL determination happens for the India GST postings. So based on the business place that is derived or entered in the particular transaction code and the charts of account and the tax code, the GL account will be determined and the posting of that GST amount gets done on that GL account. So this is all about how the postings are enabled or the GL integration for the India GST. So overall, we have covered what is the basic setup that is required and how various parameters are derived at the time of posting a particular transaction. and how the tax rates are determined, and once the rates are determined, how the postings of GST happen to the GL accounts. So hope you have liked the video, and if you find the video really useful, then please do like the video and share it with your friends, and do not forget to subscribe to the channel. If you subscribe to the channel, it will really motivate me to create many such videos. See you in the next video, and until then, take care.